Let's just start off with the big news that came out just yesterday. There looks like there's a vaccine that's available that could be 90% effective. And let me cut right to the heart of the matter as far as you might be concerned, which is what does this mean for Federal Reserve policy if indeed we have a vaccine that could be widely available as soon as sometime next year?
Well, first of all, we have policy at a really good place. We can make policy less accommodative if the economy rebounds sharply, and we can make policy more accommodative if we need more of a longer bridge. So the vaccine news, of course, for everyone out there in the globe is welcome news. But we also have rising coronavirus cases right now, both in the United States and across the globe. And so that's my top priority, and thinking that we need to continue to support the economy and the American people as we move through this virus.
I want to get to that very important issue in just a second, but you said something that was interesting. You said you could make policy less accommodative. Does that mean that would be your inclination if indeed the economy returns to normal more quickly than expected, would to be to take away some of the accommodation out there?
No, my view is policy is in a really good place, and I was simply saying that we have a very flexible policy that allows us to adapt as changes emerge in the economy. So we're well prepared no matter what the economy brings for us. And that's the thing that's the main message to the American people, is that we're prepared for whatever the economy brings. But right now, my own modal outlook is that we'll continue to have this slower pace of growth, not as rapid as we did as we first came out of the shelter-in-place stance, but not completely in the terrible times that we were in March and April.
I think the uncertainty of what's going on right now, especially with the virus, requires us to have conversations on both sides of that issue. You talked about the surging pandemic. How does that change your outlook right now in terms of the strength of the recovery and whether or not we'll see something of a continuation of the strong growth we had in the third quarter?
So as I said, my modal outlook is for a continued expansion, but at a slower pace than we had right after we came back from the shelter-in-place orders. And that's really a reaction to two things. First of all, we had to ramp up to get back into activity, and that caused a surge in growth, as you've already referenced. So a natural slowing is expected. But I also see the rising caseloads, and we know that voluntarily people have go back into their homes. They're less confident in being out when caseloads rise. And so I would expect some further slowing as we go forward, consistent with the rising caseloads. Same thing we've been hearing for a while. Top priority is get the virus under control. The economy goes where the virus goes.
President Taylor, you've been among those Federal Reserve officials calling for additional fiscal relief. It seems very uncertain now whether or not there's going to be the possibility of relief in a lame duck Congress, or even the size of one that would happen after the new Congress takes their seats. How does that affect Fed policy? If the fiscal side does less, does that mean the Fed needs to do more?
Well, the way I think about it is that the fiscal support is really critical. When the Congress came out with the CARES Act and put that funding, we saw immediately how that cushioned households and small businesses and helped them get through the virus. The virus is still with us, so more is needed, and I've referenced that before. If we don't get that, then this is a mini fiscal cliff, maybe even a major fiscal cliff for the individuals who are experiencing that. And I think it's useful to put some faces to those numbers. This is, people who are out of work, can't find jobs because jobs aren't available yet, and their unemployment insurance runs out. Then they can't pay their rent, and maybe they get evicted. And small businesses who run out of their PPP funding and need more additional support to weather the virus. So this is certainly going to impact those households, those businesses. Ultimately, it impacts our aggregate economy, and the economy would have slower growth in the absence of fiscal than it would have if we had a long and strong bridge that fully and completely gets us through the crisis.
Let's talk about what more the Federal Reserve could be doing here. You're doing about $120 billion a month in asset purchases. Fed Chair Powell at his last press conference said there was a discussion about additional asset purchases or a framework around those asset purchases. Could we expect something from the Federal Reserve as soon as the December meeting when it comes to some change in the purchases that you're making now?
Well, let me not front run the committee on what our decisions will be. We're still robustly debating and discussing these issues. But for now, I really see policy in a good place. If you look at the expectations of our funds rate, people have them in the right place. We said we were fully committed to keeping the funds rate low until we are fully back on track to achieve our dual mandate goals of maximum employment and price stability. In addition, we have asset purchases well in place, and we are discussing what more could we do if more is needed, and what should we do in terms of communicating a plan for our asset purchases going forward. Those discussions are always ongoing, but we really had a robust debate, as Chair Powell referenced. I would say a discussion more than a debate even, and we're all dedicated to the same thing: continue the mission to serve the American people with our top policy tools. And I would say our policy tools are powerful. And just when we say we've recommitted to it, when we release our September statement, that already gives the American people confidence that we're there and we're supporting the economy.
Shepard Smith here. Thanks for watching CNBC on YouTube.